Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Wednesday, August 26th. So let's take a look at that data. The data that the market has been watching for the Fed is the core PCE. That always comes out the last week of the month. And it came out at up 0.2. Consensus was 0.2, a little bit higher than last month's 0.1, but certainly 0.2 times 12 is 2.4%. Not 2%, but not so dramatically high either. So really right on expectations. Then with a second read of GDP growth, 1.5%, right on consensus. This tends to move around a little bit, so that's a pretty good guess. Personal income and spending, I always like this because this is retail sales plus services. Personal income up 0.4%. That's doing well, but personal spending only up 0.2%. And then finally, durable goods, the number that I always like to look at is non-defense goods orders ex air. So not defense without airplanes, because airplanes are bulky. Market was looking for 0.9%. It's only up 0.2%. So really no real risks there in terms of overheating. And then finally, it's Wednesday, so we look at what's happening to energy. Crude stocks are just a tiny build. And then gasoline, we have a 2.5 million barrel draw versus 0.7 million. And then distillates diesel, essentially, 2.2 million draw versus 1.6. So still substantial draws in gas and diesel. We'll know later how the 5-year auction went. The 2-year auction yesterday was very good. Okay, so this is basically, Bloomberg says the PCE coming at 0.2 gives the Federal Reserve some room to hold interest rates steady in the near term. It's 0.2 month on month, 3.3% from year on year, but a lot of that is earlier in that period and not in the past few months. And of course, there should be a recency bias in this when you're looking at data. So the numbers add to a string of reports suggesting that the economy cooled in July after a robust spending earlier in the summer. Investors are going to be listening to Chair Warsh at Jackson Hole on Friday. I don't think he's really going to say anything. He doesn't do forward guidance. He doesn't want to do it. So he may talk about, payments and different things. He may be very boring and not mention anything about it, or maybe mention some of the soft data. And this is interesting. Starting next month, the BEA will make changes to how prices are measured for certain categories, including legal services, software, and investment advice. And many economists expect that will mean a lower PCE reading. One of the biggest jumps was actually investment advice went up 5.6%, so that really helped boost that number this month. Now, Bloomberg Economics, and as I've said before, I like Anna Wong a lot. They basically said the main takeaways from July's personal income and outlay report are that the underlying inflation pace is relatively soft and real spending is tepid. We expect the Fed to stay on hold for the rest of the year. I completely agree. Taking a look at the Fed watch probability, the day-over-day change. Yesterday, it was a 60% chance that the Fed doesn't hike. Today, it's down to 58%. I think that's just a little bit of trading. It is down almost 10% from a week ago when 67% expected no move in September. I expect that to remain true. No move in September. I think there's probably a 20% chance. And something unusual would have to happen. Okay, so yesterday we spent 3 slides talking about Stanley Druckenmiller because I'm a big fan of his. He says a lot of things that make sense. And people actually ran it was a well-written article, and people ran the article through an AI detector. And it turns out that he used AI. And as a matter of fact, he gave an interview yesterday and he said, of course he used AI to draft the widely shared op-ed for the Wall Street Journal. You can tell the article says, Axio says that certain things that certain styles that AI likes to write in, people can typically tell if the 30-year must trade at a 5.5% to clear, that isn't a crisis. It is an invoice. Isn't a crisis? It is an invoice. It's very AI. And then same thing, it goes, this wasn't liquidity management, it was price management. Not liquidity management, price management. Druckenmiller was not ashamed at all. He says, there's a reason I moved from an English major to being an economics major. I'm not embarrassed by it. I write everything using AI now for the same reason I use a calculator when I do math problems. Well, if you're going to put it like that, it makes a lot of sense. So I ran it through my own GPT-0 scan, and it said it was highly confident this was AI generated. So my sense is, it goes, I want to say the following things, fact 1, 2, 3, and 4, and 5. Please write me something. Takes a look at it, probably makes a couple of edits and sends it along. Now, the Wall Street Journal actually had a comment about this. The opinion editor goes, the question for us is whether we publish from contributors reflects an author's original argument and if the author has the standing and the credibility to make it. In Stan Druckenmiller's case, we have had a relationship with him for many years, and nobody can doubt that his op-ed is his genuine opinion. And I would agree, having watched Stanley Druckenmiller for a long time, that was definitely Stan. It was his ideas. It was created in it was written in a very clear and strong way, and that's a good use of AI. And as a matter of fact, I mean, if you use AI to polish, if you use it for research, it makes a lot of sense because, like a spreadsheet and a calculator, it saves a lot of time. Now, the journal itself wrote about this, and they gave a little more detail. Druckenmiller said, I was a B student in English, but an A+ in economics. Would I prefer that I was a great writer? Yes, but that's not who I am. He added that he and his colleagues in his family office, Duquesne, which still runs a lot of his money, uses all the major AI tools, Anthropic's Claude, ChatGPT, Gemini, and Perplexity for work, including writing. He says it's like a speechwriter or a calculator. He says, at 73, I'm kind of proud using it. He said he wrote it over the weekend while on vacation with his grandchildren. And he added, there's no one I know who doesn't use AI for writing because it does. At the end of the day, especially if you're trying to polish the last 10%, it saves you a lot of time. But the ideas have to be your own. I think that is the emphasis I would make. And a funny note, he said he wasn't ashamed of using AI, but he was a little stung by the reaction. The only embarrassing thing was how many people reached out and told me how much better written this was than normal, he said. Okay. Journal reports that Meta has reached an $18 billion settlement with 48 states over child safety claims, with 48 states attorneys general. It's except New Mexico and Florida. I think New Mexico had a different lawsuit, and Florida might have something else going on. But it's going to bring an end to a massive federal trial over social media's harm to teenagers, and ushering a new era of tech companies having legal responsibility for their platforms, because they've always said that they're protected by, we don't actually responsible for what people put on their platforms. But the argument has been that they are making things very addictive. So kids want to scroll. They call it doom scrolling for the younger generation. So as part of the agreement, Meta will also make changes to its services, Facebook and Instagram, including implementing a default 2-hour limit on its apps for users under 18. And then really interesting setup, I wonder how their competitors will say for this, is Meta will pay out only 70% of the settlement unless TikTok and YouTube, which is owned by Alphabet, YouTube is, also agree to set default 1-hour time limits a day on their apps for underage users, and each pay the states roughly $5.3 billion. So Meta will only pay the remaining $5.3 billion if the other two companies agree to their terms. I don't know if they've been talking to them, but why would Facebook and Instagram get 2 hours? They get only 1 hour. We'll see how that works out. The settlement will be distributed to the signing states in annual installments over a 10-year period based on the size of their populations. Other things they'll do is night mode. They'll block apps between midnight and 6 a.m. and school mode, disabling push notifications during school hours from 8 to 3 p.m. And can only be changed with a parent's permission. A judge has to approve this. No guarantee that they will, but they usually do. The attorney generals had asked for $200 billion, obviously asked for a really big number and then negotiate down. I read yesterday that Meta's internal fears is it ultimately could be $1.4 trillion, which would make this $18 billion settlement or potentially $15 billion settlement a pretty smart move, because what a company wants, even as rich a company as Meta, is you want surety. You don't want to have to fight and potentially get a gigantic settlement, right? Their net income in fiscal year in 2025 was $60 billion. So over 10 years, they can certainly afford this. Meta, big jump, but it's been a bit of profit taking, still up 1.3% on the day, a little bit earlier today. Very choppy trading in Meta. This is an adult swim. I have a little bit of it, but I had it from a long time ago. I'm sort of neutral on it right now. So moving to Asia. So this is from Crane Shares, from Brendan Ahern, who's the CIO of Crane Shares. And they do a really nice research piece on China because they focus heavily on China. And he says in today's piece, policy cannonball coming, ? And he said, when I looked at the mainland media website sohu.com, he found an interesting article, part of a series of 4 articles that signed by a guy named Zhong Kaiwen. Don't know who it is. Even he didn't know what it was. But the series heavily emphasizes manufacturing, focused on the 4 articles: technological innovation accelerating its transformation of industrial competitiveness, China's position as a global supply chain hub being continuously consolidated, enterprises accelerating their digital transformation and achieving a new upgrade, and then taking care of the risks and hidden dangers in the economic field. Now, their writing is very, very political and stilted and painful to read, I think, even in the original and in the English translation. But the key point he said was, please pay attention to this. In the Sohu.com article, an economist was quoted as saying, fiscal policy will focus on implementation, monetary policy will maintain easing, domestic demand will focus on increasing income and service consumption, and industrial policy will focus on AI. In poker, we might call this a tell, as they're literally telling us what is coming. So he feels that the market is apt to do what is least expected, and he says the exceedingly light China positioning, which has him quite optimistic. That means not a lot of foreign money is actually in China right now, and a lot of people might jump in. So he's bullish on it. So let's take a look. This is the main benchmark, the China Composite 300. It's not really inspiring. I mean, just really sideways, a bump here, couldn't sustain it. Now, in the weekly, it looks a little bit better from, because it's at the upper left hand of the move and hopefully basing here for another move higher. This is the primary composite. If we move to CQQQ, which is the Invesco Tech ETF, China Tech, also not inspiring. I mean, new lows here. Maybe if you're trying to bottom pick against here, the 1 year doesn't look that inspiring, but the 5 year looks a little bit better. And this is from the last 2.5 years. You've got a steady move higher. We're towards the bottom of the band, but not looking like we're going to break through it. So if you want to put a modest allocation here, to take advantage of potential moves in China, if they have a big fiscal policy change, I don't think so, but this wouldn't be a bad place to put a small bet. Okay, so moving to Brent, there was actually, after the show yesterday, a lot of rumors about a U.S.-Iran deal. It was a rumor coming out of China. The CIA director was in China. We don't really have any more news on that. Brent made new lows overnight, but bouncing a little bit today, so maybe this is the bottom. Crypto volumes are dropping. You can see Bitcoin 30% day over day, ETH 25%, Sol 44%. Liquidation is basically over. So now the question is, can crypto sustain this move, or will it go back down on profit taking? Crude finds bottom and bounces, so yields are bouncing a little bit after two days of going down. Equities are flat. The dollar is up a little bit, and it could be the first down day for gold in 6 sessions. Nothing dramatic, but first down day. I think bulls are going to be unconcerned and will buy on dips. And as we just mentioned, crypto easing a little bit on lower volume. Okay, NASDAQ. Maybe peaking a little higher. Let's see what we have at the end of the day. S&P and 500 waiting for NVIDIA. It's a little bit of a mixed bag here. The chip makers aren't doing well, but software are doing better. Thank you for watching today, and I will see you again tomorrow.